Zach, how are you, sir?
Good, man. Good, man. Last 2 months of the 2022. What's going to happen? Crypto, right? That's what we're talking?
Is crypto going to crash
Yeah. I
in
mean,
November? We're going to get into that.
yeah.
Excuse me. Before we do that, though, let's talk about Clear real quickly. If you're interested in Clear, want to learn more, links in the description below down there to check out all their socials, website, amazing stuff there. Oh, there's their car. Yep.
Big race this weekend.
Yeah, big race, big race. Well, depending on when they're watching this video, big race of the weekend of 21st, 22nd, 23rd October. There you go. So Zach, I'm going to set the stage and pass the mic to you. Is crypto going to crash in November? We got the Federal Reserve meeting on November 1st and 2nd. We got a CPI report, so we will get the October CPI report in mid-November, and then we got another Federal Reserve meeting set in December. So will crypto crash in November? I'm going to sit here and now go.
Well, okay. So Bitcoin bottomed earlier this year in the summer, back in June, right? We got down to like 17.7 at one point. We've had interest rate hikes since then. We have not got down to those levels after that, though. So, I mean, Bitcoin's been really trading in this window from like 18 to 20,000. We had that one little bear market rally, right, to 25,000, and Ethereum got up over 2,000, but it was short-lived. When you really zoom out, I mean, since the crash in June, Bitcoin's been just trading sideways. It's been really boring. I mean, because there's not been a ton of up and down movement. So I think if it's a 75 basis point hike, in my opinion, I don't think anything changes.
Right.
And that's just where because I mean, I don't have anything historically to go off of. Now, will we get a little bit of a dip in the market, presenting a ton of opportunities for, a few hours or a day or so? Probably. Probably. But I think it'll come right back up and continue to trade in that 18 to 20,000. I really do.
Yeah, and so I'll take that and go a little bit different of a direction. If you look at the CPI report that we got in September, that was the August numbers, the report we got in September, and you look at what happened to the stock market really, and then secondarily to the crypto market. The stock market went down 1,200 points in that single day, the worst move down in 3 or 4 years. The crypto market did not react as badly, but the crypto market moved down pretty dramatically, probably about 7, 8, 9% that day as well, bounced back faster.
Right.
And then, so now you take that and go, all right, now you look at what happened in October when we got the October CPI report for September's numbers. It wasn't good. In fact, the numbers were bad, and the stock market did nothing. It bounced down, came back immediately. No 1,200 point drop is my point.
Yep.
And the crypto market went down 3 or 4%, and almost immediately within a couple of hours bounced back. And so, yeah, and so
your point there, it's a great point. I mean, so do you think it's kind of baked in?
Well,
do you think these 75 basis point hikes are baked in? It's almost like, we know it's coming again, but I mean, how low can we go here?
So that's my point. It's like, this is not Austin's opinion about what happened. That's what happened. This September CPI report announcement crashed the stock, moved crypto down. I wouldn't call it a crash. The October CPI report didn't really, I think it went down 300 or 400 points. The stock, and by the way, stock is relevant in this discussion. The stock the stock market's relevant. So, but then it came back. And so, yes, it was baked in. So now let's look forward to the Federal Reserve, the FOMC meeting that's going to happen on November 1st and 2nd. We are going to get a raise hike. It's going to happen. And yes, I agree with you, Zach. It's going to be 75 basis. And so the answer to your question looking in November is that I think it is baked in, meaning that the market is already expecting that. So I think we'll get what I call a knee jerk. We'll get a bounce down in both respective markets, stock and crypto. And then I think we'll bounce back up, and it'll be, but November will be flat. And by the way, we have a CPI report in probably November 13th or 14th. November 13th or 14th. We'll get the CPI report for October. It's not going to be great. Blah, 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 blah.
I mean, the good thing is, I agree with 100%. Unless we get something like out in left field where they move at 100 basis points or something like that, I think we see much of the same, right?
Yeah.
But when we look at inflation, it's still bad, but it did peak in June, just like the crash happened in June, and it's slowly but surely gotten better. Not to the levels we needed to get to yet, but we peaked in inflation in June. So right now, as we sit here today, inflation has peaked so far. I mean, so as long as these trends continue, I just don't see how much more of a sell-off we could see in stocks and crypto. I think people who were going to sell, they sold. They got out, and now we're kind of in this no man's land of there's not a lot of activity, there's not a lot of news. So outside of like a black swan event or them raising the interest rates, that exceed our expectations, I think it's going to be much of the same.
But here's an interesting point. It also feels like, and you kind of can see messaging coming out of the talking heads around the government and all this. And oh, by the way, a lot of the, the financial media outlets where there seems to be this narrative coming out of, okay, you're hitting it with a hammer every time with these 75 basis points, Federal Reserve. When is too much enough? When is too much too much? And when should you start to maybe, look at different ways to do this? You know what I'm saying? So my point to you is there going to be a lessening from the Fed instead of these 75 basis points? Because the Fed has come out and said they want to take it from 8%, where approximately 8% to 2%. I mean, which is insane.
It's going to take a while.
That's going to take for a while. And their only real weapon is to raise the base interest rate. But I saw this yesterday, Zach, the 30-year mortgage rate for good credit right now, 7.37%.
Insane. And that number has come up.
So after the 75 basis point raise we get in November, that's going to send interest rate hikes to go buy a house north of 8% to people with good credit. And I mean, there's coming a point where you are effectively shutting down your entire real estate market in the United States to a vast majority of people, because they're just simply not going to go borrow money and buy a house at 9%. They're not.
I agree. And I think that's why a lot of people think a big correction is coming there, in the housing market eventually, right?
Yeah, well,
it's kind of the last domino to fall, if you will.
But I guess my question to you is, do you think a correction's coming in the Fed's stance to how aggressively they're raising rates?
It's a good question. Here's my thoughts. I mean, what else could you do?
That's the question.
What else could you do? And here's the thing. While it hasn't made a huge impact here since June, when we had the big, crash, let's call it. What else could you do? It is coming down. It's just a slow and steady decrease. I mean, I don't know what the other options are right now. And I think personally, I'd rather have them continue to do it at 75, because the quicker we can get there, because we need inflation to about 4%, give or take. I mean, I know the goal is 2%, but if we get it to 4%, that's normal-ish for the U.S. Like, we can operate, like we've operated a good quality economy there at 4% for a long time.
But
I just don't know what the other option is.
But here's the thing, dude. I'm basically agreeing with you. But I'll go back.
Should have started raising them last year. Instead, we had this 2021, this pie in the sky. Everything's perfect. No, it's not.
No, it's not.
No, it's not.
But here's the final thought. For us to get to 4% from where we're at right now, we both agree, right, that there are more Fed hikes coming. November for sure. December probably for sure. I'm going to go back to my housing market analogy. To go borrow money to buy a house, for a 30-year fixed. There will come a point in the near future that if that could be north of 10% for good credit, and that, how
early next year probably.
Yeah, and that's craziness. And by the way,
a correction would have to happen if that. I mean, if we get into those levels, right? I mean, I don't think we're going to get a housing crash like we saw in 2008 or anything like that. I think they have too many measures put in place for that not to happen again. But I know a lot of people out there that are banking and waiting on a little bit of a correction to go snag a good price on a house.
It just comes down to the fact of, to go buy a car, borrow interest for that, borrow money. I mean, that's what you're really talking about, right? Yeah. That base interest rate for you to go do large purchases that fuel a vast, huge majority of our economy.
Yeah.
And that's the question. When are you going to stop? Because you're going to tell me you're going to shut down effectively the ability for people to borrow money to go buy a car, buy a house. There has to come a point where enough's enough. All right.
Well, just today, Elon Musk said we could have a recession that lasts until 2024.
Well, we're in a recession, but that's a whole other discussion.
Correct. We are. Yeah. Well, first, okay, real quick. There's a lot of smart people out there saying, "Is a recession coming?" I'm like, we're already in one. But
when did we redefine?
I guess the big question is, how long will it last?
Yeah.
And could it get worse? So
and to clarify, you and I are saying we're in a recession because the barometer is 2 consecutive quarters of declining GDP growth, right?
That's
which we've done.
That's what's been told to many for years, decades.
For decades. Okay. Okay. All right. That's what we got. All right. We'll see you. Bye.
Later.